Hi, welcome to taxworry.com, where every article is a tax solution. I am presenting before you a small slide listing 10 simple mistakes I found usually taxpayers do. These mistakes occur because they do not give attention to some simple rules of taxation. So therefore I would request you to give attention to these 10 simple rules of taxation and do not repeat the same mistake so that you do not have to pay higher tax than what you are supposed to pay. The first mistake is related to interest deduction on self-occupied house property. As you are aware that in case of self-occupied house property, if you take loan, then the maximum allowed interest deduction is 1,50,000 rupees. However, there is a small rule which you must pay attention to, that the house against which you have taken the loan must be completed within 3 years. So therefore, when you take home loan, you make it sure that the possession certificate is received within 3 years. Otherwise, your interest deduction will be restricted to 30,000. The second mistake is related to uh, capital gains exemption. Uh, you are aware that under section 54 or section 54F, capital gains exemption is provided if you buy a residential house. The rule says that the house which you have bought and claimed exemption under section 54 or 54F should not be sold or transferred within 3 years. Transfers you cannot even give gift within these 3 years. If you do that, then the exemption which was allowed earlier will be taken as your income in which the house property was transferred. So give attention to this rule and do not do the mistake of selling it within 3 years. The third mistake is also related to capital gains exemption under section 54F. You know that section 54F is allowed when you are selling any property other than shares. So in this case, there is an additional rule that you cannot buy a house within 2 years after claim of exemption, or you cannot construct any new house within 3 years. If you do that, your exemption will be uh, added as income in the year in which you have broken this law. So keep in mind, if you have claimed exemption under section 54F, you should avoid to buy or construct the house within 2 or 3 years as the case may be. Mistake number 4 is one of the most common type of mistake which I found that people do. They take loan in cash in excess of 20,000 rupees, or when they have taken, or even if they have taken by check, they are repaying the loan in cash in excess of 20,000 rupees. You should be aware that the Income Tax Act has two provisions under section 269S and 269T, which prohibit either accepting the loan in cash in excess of rupees 20,000 or repaying the loan in cash in excess of 20,000 rupees. So you should avoid taking or repaying the loan in excess of 20,000 rupees. If you do not follow this rule, 100% of the amount of loan which you have done in cash will be the penalty amount. So avoid taking loan in cash or repaying the loan in cash, and always take the loan by account pay check only. Mistake number 5 is related to businessmen or professionals. Uh, the new businessman or professional may not be aware that if they buy or spend in cash in excess of rupees 20,000, such expenditure will not be allowed when their business income will be computed. So if you do not follow this rule of not doing any cash purchase in excess of 20,000 rupees, you will have to pay higher taxes. Of course, there are rules that the agriculture products can be bought in cash, and so better that if you are a businessman, you consult your chartered accountant or tax professional if there is no other way than to purchase in cash. They can suggest you whether it comes within the rule or not, but try to avoid purchase in cash in excess of rupees 20,000 if you are a businessman or professional. Mistake number 6 is also one of the most common mistake I found taxpayers do. They do not file return within due date. Filing of return within due date has its advantage. For example, there will be no penal interest under section 234A. You will be allowed to carry forward all of your losses to other years, and you will have the facility to revise return for up to 1 year. If you file late return, you will not be able to revise return. Your business loss, capital loss will not be allowed to be carried forward to be adjusted in future years, and you may also be penalized by imposing interest under 234A. So my advice is to always file your return within due date. Mistake number 7, this relates to shareholders of private company. Shares of holders of private company or closely held public company, I often find that they are not aware that if they take loan from their company, which they do often, they may just doing a very big fault, because under Income Tax Act it has been said that if a private limited company or a closely held company has profit reserve and such company advances loan to any shareholder having 20% shareholding, and there are other rules also, then such loan will be considered as income in the hand of recipient. So therefore, if you are supposed to take a loan from your private limited company and you are holding shares in that, I would suggest that you first consult your chartered accountant or tax professionals, and they will give you advice whether the loan should be taken or not. But do not take the loan from your private company in which you are holding the shares exceeding 20% blindfully. It may just increases your tax burden. Mistake number 8 is related to discontinuation of insurance policy for which the deduction under section 80C was claimed. You know that section 80C provides in deduction of rupees 1 lakh for buying life insurance policy or unit linked insurance plan, commonly known as ULIP. The rule says that in case of life insurance policy, you cannot let it lapse up to in the beginning for first 2 years for the want of payment of premium. Similarly, in other cases also there is a period of 2 years fixed. So my advice is that in case you have bought insurance policy, then you continue with the policy at least for 2 years in the beginning. Otherwise, all the deduction which was given to you will be added to your income. Mistake number 9 is non-disclosure of PAN to the deductor. If you are going to receive any amount on which tax is to be deducted, it is in your interest that you inform your PAN to the deductor, because now the rule under section 206AA has been changed, and it has been made compulsory that the deductor in absence of your PAN will deduct tax at the highest of rate. For the simplicity, I would say that if you do not give the PAN to the deductor, in most of the cases deductor will deduct tax at 20%. So think that if you are a contractor and you are going to receive the payment usually after deduction of 1%, and you have not informed the PAN, the deductor will be deduct tax at the rate of 20%. So therefore it is in your interest that you inform the PAN to your deductor. Mistake number 10 relates to your claim of deduction under section 80C for repayment of home loan. You know that section 80C provides deduction of rupees 1 lakh for repayment of principal amount of home loan. So if you have taken deduction for repaying the principal amount of home loan, then the rule says that that house cannot be sold within 5 years. If you sell that house within 5 years of getting possession, the deduction which was allowed earlier under section 80C will be added to your income in the year in which this house was transferred. So friends, those were 10 simple mistakes taxworry.com advises you to avoid. Do visit taxworry.com where every article is a tax solution. Thank you.